Alright guys, so today we'll be discussing an RSI based strategy which has returns like 9,000% in Microsoft, Walmart at 4,300, J&J, HD, Apple, and the list just goes on. So let's start. So first what I'm going to do is just click on open and then new strategy. No. So you basically get this. So what I'm going to do is delete off all these things that won't be necessary for you except for that version 5. So we'll be doing this in version 4. I've given a full tutorial on how to do version 5, but still there are lots of traders out there who still haven't transitioned. But if you want to learn more about version 5, full tutorial is there in the description, not in the description, on our channel, so you can check that out. So anyways, let's start with the strategy, the RSI based strategy. So first, basically just write strategy, and then shouldn't have deleted that off, but let's call it RSI strat bid, and then overlay equals true. So in case we want to display it on the chart, we can put that there. So the strategy is pretty simple. Before that, I want to declare the RSI periods. So what I'm going to do is I'm going to say RSIP. So RSIP equals input. So in future, if you want to change the RSI period values, you can select from the user. So that'll be really good if you want to change out the values and see what you get. So I'm going to give it a title. Title equals RSI period. And then what type should the RSI value be? So it's an integer type. So we'll give you type equals input.integer. And what's the default value? So that will be def val. Def val equals 5. So the period that I'm doing is a 5-period RSI value. So I'll come into detail on why the values of 5-period is chosen, but then first let's do the strategy. So now we've decided the period, so now I need to calculate the RSI value, right? So we can use the built-in indicator RSI. So RSI close, and how many periods is that? We've already declared that, so that'll be RSIP. So I'll store this value into a variable, so we'll call it that RSIV. So now the built-in indicator RSI will calculate the 5-period RSI and store it into RSIV. Now with the strategy. So the strategy is pretty simple. Just going to create an if statement and say if RSIV is less than 30, and then comes the other conditions that I want, because I'm following a trend following / momentum strategy. So I need it to be close, greater than SMA close, comma 150, and the other condition for the strategy being close less than SMA close, comma 30. Now, where did I get these values of 150 and 30 and 30? Well, the reason, there's a mistake there, typo mistake. The reason why I got these values is through different processes. It's by the process of optimization. So initially a brainstorming session to figure out what kind of strategy I want, but then followed by an optimization, and then a forward testing, and then Monte Carlo simulation. Once all these three are done, then I want to check it randomly across thousands of stocks over the past 10, 15, 25 plus years. And for that, we do a portfolio backtesting. So I do that. I teach that in our training course, so I've done that in the quant program. So once we do that, and once we backtest across multiple stocks over multiple years, over the financial crisis, over the dot-com bubble, over the 2020 crash, even right now, and then we'll figure out whether the strategy works, and then we go ahead with the strategy. So these values, you see this 30, 150, so and this 30, they're better values than that, but I'm not going to give that away. That's for you guys to find out by you guys doing the optimization and the forward testing. And then we figure out which strategy works best, which values work best. Maybe sometimes 175 works better than 150, or maybe 25 works better than 30. So that's why we do the optimization, to find the best values possible. So once this condition is there, now I'm going to do, obviously, go long. So strategy.entry long. I'm going to do a strategy.long. So now we've given the information to Tradingview Pinescript that, hey, if these conditions are met, you go long. Now, that alone is not our strategy. We need to know the exit, right? So the exit is a crucial part of the strategy. In fact, it's the most important part of the strategy. It's not the entries. I know people spend a lot of time trying to figure out the entries, but exit is the most crucial part of any strategy. So this strategy, I'm going to use a simple stop loss, take profit strategy. So we've discussed how to create a stop loss. For people who don't know, it's there in our YouTube channel. So we've got a trading stop, and also we've got a normal stop loss and take profit. I think we also created a strategy. I think it's a pullback strategy, which is also free on our YouTube channel, which creates a typical stop loss, take profit strategy. So I'm not going to go deep into explaining the stop loss and take profit strategy, but I'm just going to just go as fast as possible. So if you guys want to download the code will be there in the description. So you just have to copy paste, or you can just write it down as we speak, which is also a good thing to learn as well, to write down the codes while we speak. So I'm going to put the values in there. So long stop equals strategy dot position underscore average underscore average price. Average price. So you see that's become like red. Again, I'm not going to explain exactly how this thing works because we have discussed this before. So SL is right there, 0.10, and then long profit. Just going to copy this entirety. And that will be 1 plus take profit. And then I want to close the position when either of these conditions met. So if strategy dot position underscore size is greater than 0. So in other words, if we are in a position, then let's do the stop loss and take profit rule. So strategy dot exit ID equals close. So basically we want to when it gets displayed on the graph, we want to say that it's close position. So what should be the stop price be? The stop price should be the long stop, and the limit or the take profit is a limit order, so that would be long profit. So hopefully we have got everything in order and it should go through, but we'll see when we save it. So RSI strat vid, so we've got to save that. Now I'm just going to add this to the chart. Hopefully there's no errors. So luckily we don't have any errors. So you see the values here, 14% and 0.04%. That is wrong. So I have discussed this multiple times before in other previous videos, but still I'm just going to randomly go through it, roughly go through it. So basically what happens is that if you go into settings, you can see the initial capital is 100,000. So the trades are compared to the $100,000. So you might have 100% returns in one of the trade, but 100% returns in one of the trades might be just $10, and that $10 is compared to 100,000, which is like really small value, and that's why the numbers of the percentage is wrong. So we need to change that. So in order to change that, we change it to 100% equity, and then we've got the actual value. So even if it's 100,000 or 1,000, the values doesn't change at all. The dollar values might change, but never look at the dollar values, always look at the percentage values. These numbers are constant, that never changes. So even if it's like 10,000 or even like, let's put it as 5,000, it barely changes the percentage values. There might be like minor 0.%, and that's because the dollar is rounding numbers. So I've discussed it thoroughly in the previous videos. If you want to really go through that, go through the previous videos and you'll understand in detail why we changed to 100% equity. But all you want to know is that not to get the accurate percentage values, you need to change it to 100% equity. Otherwise the comparison is basically done to $100,000, which gives us a wrong value for the percentage. Like I said, again, never look at the dollar terms, always look at the percentage value. So this is the Microsoft, and there is Walmart, J&J. The list just goes on, but obviously there'll be stocks where it doesn't work, and that's why it's very crucial that you portfolio diversify. So in this, I think most of the stocks, it seems to work. There has to be a stock which doesn't work. Okay, Google. So one of the returns are quite less. One of the things that I do normally, I think maybe it's Tesla where it didn't work properly. Yeah, Tesla, there you go. Finally, we found one stock where it didn't work properly. So one of the things that I've discussed in the previous videos is that when I create a strategy, the first thing I do is I check it on SPY, QQQ, and IWM. If it works in those index funds, then 9 times out of 10, it'll work in majority of the stocks. But obviously, I have performed this back testing and optimization and walk forward testing and done a portfolio back testing of random stocks over 25 years in different platforms, especially Army Broker and Python. So I'm kind of thorough with this strategy. The strategy works, but obviously there are better values. Even the stop loss and take profit can be optimized, i.e. change the values of this 0.10 or 0.30, which is a 10% and 30% respectively, and see which one gives a better risk reward. So maybe 5:1 might work better than a 3:1. So why should I should limit myself to 3:1. So that's what optimization basically does. So I'm just going to go to the list of trades. So I'm just going to go to Microsoft where we started off with and see whether the 10% and 30% has worked, which is quite crucial. So you can see 10% there, 30% there. You can see 12.1%. So those kind of things actually happen because of gap trades, and it's a stop order, so it's not a limit order. So gap trades happen. So here again, 30.67 again, gap trades happen. So some of these kind of cancel out. So that's basically slippage. So you have the option to leave slippage numbers. The reason why I don't leave is because sometimes you are in the positive side of slippage. So you can see here it's 30.67. 30.01, 30.76, so it kind of cancels out. So sometimes you're kind of in an advantageous position and sometimes it's kind of in a disadvantaged position. So net you're kind of in it cancels out each other, the slippage. Sometimes you make more money out of it, sometimes you make less money out of it. So you can see how perfect it is, and the good thing about this strategy essentially is that because we have a condition that close is greater than close 150, it only picks up stocks which are healthy. So any stocks which is trading below the 150-day moving average, generally it tends to avoid that. And because of the good stop loss of 10%, any strange events or something like that, it kind of gets out very fast. So hope you kind of like this strategy. If you want to download the strategy, it's always there in the description. By the way, the watch list of the stocks that I've selected. So I made a video, the previous video, the copy hedge fund trade, so which kind of gives you some of the best stocks the big funds have invested in. So it's always good to apply the strategy in these good stocks. So I explain to you where we can find these stocks and what kind of watch list you need to create. So applying many of these strategies, whether it be the ADX strategy, whether it be the MACD strategy, you can apply there and you can get much better returns by choosing the right pack of stocks. And those are the stocks that you want to be applying. It will work randomly across all the stocks, but I like to perform it on stocks which are healthy companies, and assessing those investments made by Buffett and Charlie Munger and Guy Spear, everything gives me confidence on those stocks to apply, because look, we're looking at the long only strategy, so it's better off investing in those kind of good stocks. So hope you guys enjoyed this video. I'll be releasing a new one, a weekly breakout strategy, which will be coming soon, maybe in the next 5 or 6 days. So hope you enjoyed this video. Have a great day. Bye bye.